And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, everybody, and welcome to the market forecast for Tuesday, March the 29th. I'm John Hoagland. Thanks for trusting me with your time. It's great to be back with you. Big shout out to John Doherty. Did such a great job covering and taking care of everybody for the last week. I know I tuned in a couple of times. There was a lot to learn from John. Thank you again, John, for taking care of all our people here. It's been a busy morning this morning. I've been up trying to get caught up on things since about 5 o'clock this morning. It seems like there's been a lot going on. A lot has changed. I really tried to disengage from the markets while I was gone, as difficult as that can be. I know it's difficult for all of us, but it is important to try and remember to take a little bit of time away. Let's see if the vision that I have is any better than before I left. It's been a tough couple of weeks, maybe month. Lots of rollovers, lots of headline news out there, lots of opportunities to get into trouble, and some opportunities to get into some good opportunities as well. This morning, as always, it's always about context. You got to put some context over the market. Hopefully consistently. My context right now is I got a dog over here moosing me to get pet. You can see her little face over here. Lacey says, good morning, everybody, and she has missed you as well. So it's all about context. It's all about being a good risk manager, taking opportunities where you can manage your risk in a small way and look for bigger opportunities, asymmetric opportunities, as we like to call them. And as always, patience. Patience pays. This morning at 7:55, the Red Book came out, not very impactful. 8 o'clock right here in just about 10, 15 minutes, we've got the Case-Shiller house prices, FA housing prices. 9 o'clock, consumer confidence, as well as job openings and labor turnovers. I'm really happy, I guess, today. There's a lot it seems the whole world is now hopeful for perhaps a breakthrough in peace talks between Russia and Ukraine. The Ukrainian President Zelensky promises a statement within hours. Headline risks, of course, remain probable. European markets made strong gains so far last night or in their session. U.S. markets are set to open higher. We've got gaps. We've got late spikes. We've got a lot going on. Gold prices continue lower, break out to the downside in the market. The gold really just taking a hit this morning. Crude recovered some of its losses from yesterday before this news of potential truce came out. Back to the downside now. There's been a lot of changes since I sat down just to kind of enter the markets and look at things. So it's a risk-filled day, and they all are risk-filled days, and we have to make sure that we manage that risk. As always, hit the lucky like button, share, comment, question, feedback, heckling, and love are all welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. Taking a look at the VIX this morning, it was up over 30 when I left. It's 1912, down 2.5% today. The dollar index off a little bit this morning, 98.31, and the 10-year yield a little bit higher to this morning at 2.48%. This dog is absolutely driving me crazy. Come on, you want to come up and say hi? Say hi. There. Hi, Lacey. Hi, everybody. Hi, everybody. Yeah, she missed you. She missed us. Okay. All right. Gotta get back to work. I gotta get back to work. Get out of here. All right. So as always, we're going to be checking out our markets here in just a couple of minutes. Get things a little bit set up here for us. And we're going to get started. Gotta say good morning to everybody. I've missed you all. Tachyon first in the room. You win the prize. Brian, Riv, Rick, my brother, love you. Theo, good morning. Shaw, missed you too. Scott saw, and he hopefully is conquering. I had a nice vacation. You can see how tan I am. The weather wasn't all that great, but we managed to have a lot of fun anyway. Terry, good morning. Frederico, Vince, good morning. Jerry, Dan Trader, glad to be back. Thank you, Bill, Devont, JD. Thank you again, sir. Kirill, Alfred, Marcelo, Frederico, James, Sarah, good morning to you. Always enjoy seeing that little dawn that you put up there. Laura McLaren, very good to see you. Frederico, Harry, good to see you. Fred, good to see you. Fred, good to be back. Yes. And again, Fred thanking JD for taking over. Sarah, thank you, JD. Yes, thank you, Sarah. Dan, another day, another reset. Well, Dan, we gotta manage that risk. Let's work on finding those smaller risks and bigger opportunities. Manuel, Michael, good morning. There's Lacey. Yup, Jace, Johnny, Huadad, welcome back. Thank you. Andres, good to be back. Question for Hogue, do you have thoughts on possible inverted yield curve? Just noticing that as I came back, I haven't had that much of a chance to think about it, but it's always something that is on traders' minds, especially in situations like we are in. If we start seeing that inverted yield curve, it can be one of the first indications of a potential recession. And doesn't that seem to make a little bit of sense with the way things are going economically? With the inflation, with rates going up, it's going to tighten things up a little bit. And, something we have to just keep an eye on. Harry, your chocolate lab does the same thing. Yeah, I think they're all a little bit mooses when it comes to being pet. Glad to be back, Vince. Looking forward to catching up on things. Jay, good morning to you as well. Today's Tuesday. Tomorrow we have group coaching. Here is the link for group coaching. Sign up. You can send an email. You can email in questions if you'd like. We can do questions on the fly, whatever you like. That's tomorrow at 1 p.m. Central. Thursday, right after the market forecast, we're going to be doing Make Hogue Money. Let me put the link in so you can get into that. Now, that's an opportunity for you guys to talk about making a trade. I'm going to take the trade, and we're going to see how things play out. Usually about 8:20, 8:25, we get in there. We start discussing the S&Ps. This is something new, again, that we're just trying out. We're looking forward to expanding on it and adding to it and maybe adding markets or whatever. We're just going to see how this thing plays out. Join us on Thursday. Let us know what you think. If it goes well on Thursday, I'm thinking maybe we'll start doing it on Tuesday and Thursday right after the market forecast. Let me know what you think. And we'll it's not a big deal. We can certainly get that hooked up for everybody, and we'll see how it goes. Again, it's very important that you provide some feedback for that. If you like it, you don't like it, things you like about it, things you don't like about it. Most important, it's that constructive criticism that we're most interested in. Okay. I think we've taken care of pretty much all the business, pre-market business. Let's take a look. Let's start with the S&Ps, and we'll see where we get from there. All right. So I want to start with the continuous. Yeah, this is the daily continuous chart. Looks like a strange trend line there, doesn't it? It is. Okay, this goes off the low from March of 2020. Now we're going to go back out. We're going to see 3 points of contact, 4 points of contact right in a row right here. Another point of contact, more points of contact. We break out below. We've been holding below that. Okay, this to me is the long-term trend line. We're below the long-term trend line. It looks to me as though our upside market, okay, of course, we're well aware that the upside market has broken. How broken is it? We've put in lower lows, we put in lower highs. We're starting to put in higher highs and now higher lows. I think we've got a long way to go before we can deem this market not at risk of a bear market. You know, look at the S&Ps. It's back above 5% off the all-time high. Nasdaq, not so much, but at least there's good things happening. So I think we've got a lot of work to do before we can call this market bullish, but good things are happening. You know, if a yield curve starts to come into question, if we start to come into a recession, that's going to change things. And, you know, that's what these opportunities are here for us. Here's the daily. Okay, we've got a medium time frame, short term move to the downside that has broken. Now we're at risk of breaking it again. I think, you know, if we can hold above this 4,600 weekly kickoff high, we might be in pretty good shape for a while. Oh, so much of it depends on world events. If something happens, if we find a truce, if they put down their weapons and come to an agreement, that would be a wonderful thing for the entire world. Of course, those headline risks, however, do remain. Yesterday, we added 2,700 in open interest on this push to the upside towards our weekly kickoff high. Volume wasn't tremendous. Didn't look tremendous in the New York Stock Exchange as well. So the market just kind of grinding to the upside. There's a lot of weakness, structural weakness in this move to the upside, but it only matters if the market begins to head that direction. All right, 4,600, big fat round number, weekly kickoff high is the next barrier. We're above it. Looks like we're going to open above it. We have a late spike to close the day yesterday. Okay, medium time frame downside structure is broken. Here's the 30-minute. Okay, here's yesterday. Here's our late spike. I'm giving this late spike 2 bases. Good morning, Ray. 2 bases. The M period base, which is right about here, 45.56 even. And then there's a K period break when the market leaves balance and begins to push to the upside in a one-time framing framework, if you will. The K period base for the late spike is 45.46 quarter. Doesn't look like we've got much of a chance of hitting either of them, but then again, anything can and will happen. Settlement is up here, 45.68, and we've got the weekly kickoff high, 4,600. It's not really very exact here. I'm going to just push it where it should be. Looks like we're going to be opening above it. We've got a lot of overnight inventory to the long side. It might be something that could offer us an opportunity for a better trade location as the day goes on. As long as we can't close the gap, as long as we stay above the base of the late spikes, we're going to be looking for opportunities to buy strength. Anything can happen. ACH. That's our new acronym, ACH. If something changes in the world, everything changes in the marketplace. Be ready for that. Be good risk managers. Put in stops. Trade close to points of invalidation. Technically, expecting potential changes in the world order, if you will. Not the world order, my goodness, but in the situation, in the world. We've got our opportunities in front of us here in the S&Ps. We've got weekly kickoff high. We hope and above it, this could end up being very supportive for us. Okay, if we take some of the overnight inventory to the downside, it gives us the opportunity for a potential gap close. But that gap close puts us up against more supportive information in the fact that we've got this late spike in the session yesterday. I think it's really going to take something risk involved to change the situation we've got in the equities here this morning. It's going to take something to happen, and we hope and pray that the things that are happening, the potential truce, the potential agreement, we all, I'm sure, are hoping and praying that that's going to happen. Now into the crude oil. We're stuck in a little volatile range-bound activity here. We've got 1, 2, 3 points of contact down here. We've got 1, 2 points of contact up here. The market seems to be coiling, looking for new information and trying to find what direction is the correct direction, if any. Added 400 yesterday. Only 400. Shocking. Was this a hollow break yesterday? Doesn't look like it. It looks like we're continuing down below weekly kickoff low, but this is a news-driven event, just same as the S&P, same as the Nasdaq, same as everything here today. The hint of potential agreement has changed the market. So we had a hollow break to the downside yesterday. We're still kind of in a coiling, higher lows, lower highs, kind of a pennant formation, triangle formation, whatever you want to call it. So it makes things a little bit tough. We're going to see what the opening range does here. Let's take a look at the 30-minute chart here very quickly. So we did open with a gap. We've opened below weekly kickoff low. We've opened below a couple of visuals, as in last week's low and a naked point of control from back here. See if we can even see it. There it is, naked point of control. And I'm not even sure we've tested it in regular trading hour session. Let's take a quick look. Why this chart is so chunky. So here's range from yesterday. Settlement up here, 105.96. Before the information came out, it looked like this market was really working on recovering. I sit down at 5 o'clock this morning looking at these markets thinking, okay, it looks like we may be able to be patient here in the crude oil this morning, but things have changed. Take a look at the 1-minute chart. Here's the opening range trade. Could we get a bigger opening range? My goodness. 99.37 to 119. So 80-point opening range. That's a pretty tough opening range trade to try and take. If I'm going to take it, I'm not going to be risking much. I'm going to demand that the market drive quickly away from the opening range. There's no way I'm risking 80 ticks on this. No way. Back to the 30. Can't believe the size of that opening range. My goodness, that makes things tough. All right, well, we know that we've got a potential state break, the beginning of one anyway, in acceptance below the weekly kickoff low. If we get the opportunity back up at that level, that might be an interesting spot for us to take a look. Looks like there may be some fish up there. Opening range, too big to take. Still inside of 4 minutes now. Let's see what we've got going on in the Nasdaq. What odd? I know a lot of folks would be happy to see crude oil at $50 again. All right, here's the Nasdaq. Nasdaq has more room to go. It looks like it's around 7.5 points, 7.5% off the all-time high. It has been presenting as weak, but our equities certainly have been presenting as hopeful and resilient for the last couple of weeks. Medium time frame downside structure broken. Again, more distance to recover in the Nasdaq. We added 3,400 in open interest on this push to the upside yesterday on just okay volume. 30-minute chart. Again, late spikes, gaps. We've got a little bit more room to get to our weekly kickoff high here in the Nasdaq. That's not necessarily a bad thing. It offers us opportunity to limit risk when we approach it. Gap rolls. late spike rules. We got two late spikes here again. The M base, 14,954. 14,954. That's the 12 o'clock, the 2:30 to 3 o'clock bar base, and then the K base, which is where the market really broke out of the balance area from the session. 14,913. 14,913. If the market gives us the opportunity to trade at those levels, great. It gives us the opportunity to limit risk. There's no guarantee of a winning trade off of anything, but that just gives us the idea that, okay, we've got some important levels that the market has provided for us. This is market generated information. And we can, you can use those levels to of course, continue to limit the risk. This point of control we tested to yesterday. So I'm going to go ahead and move it to today's point of control if it gives me the chance. Here we go. Because today's point of control is a visual target. So if these late spikes don't play out and the market comes back in and trades back inside value from yesterday in the Nasdaq or the S&Ps, that's another special situation, the value area special situation play. We open outside of range and value and we come back in and reaccept the previous day's area of value, it's a higher probability of price reaching the other extreme of that day's value at some point in the current session. Doesn't look like that's much of a possibility, but again, ACH, anything can happen. Gold. Boy, oh boy, I missed this one this morning. I was watching yesterday and JD was talking about this bear flag. He was looking at the possibility of us closing and continuing below this bear flag. Well, there it is. We are in rollover. I have moved to June. You should probably have moved to June as well. The April contract is looking pretty thin. So these levels are now adjusted for the June contract. Oh, nice, Rick. As the fear subsides, as equities continue to show, hope and resilience, the gold is getting hit. We've got a market state break in two places. This is always amazing to me how often this happens when there's an important weekly kickoff level, a horizontal level, one of the levels that I or we come up with that we believe longer time frame traders are going to need to adjust inventory, and then there's a convergence with a trend line, whether it's a short time frame trend line or a longer time frame trend line. These tend to be important times and levels. You can see that the market traded down to it after the close yesterday, basically a late spike, and then the market continues to the downside today. So we're looking at a potential continuation to the downside. I mean, we've got a long way to go and a lot of time to get there. Let me know if you guys caught the movie reference there. This is not technically a late spike. The market closes here at 12:30 in gold. However, sometimes there's some valuable information that can come after that. When this market extended the range, it brought in some decent volume. So I'm calling this a late spike. Doesn't look like we're going to get much of a chance to have an opportunity there, but what it does do is show that this late spike, the base of it is the low of the regular trading hour session yesterday. The overnight traded within 3 ticks of it. Within 3 ticks of the base of the late spike in the overnight. Okay, weekly kickoff low, 1926. Holding, breaking, continuation. Didn't catch it. Nice. Yep, Smokey and the Bandit. We got a long way to go and a short time to get there. You guys, I want to party with you guys. So what are we looking for? Not much of an opportunity for a gap close. Seeming to be one time framing lower. Be cautious. Trying to pick a low here. Wait for some kind of structure. Who doesn't love Jerry Reed? Jerry Reed was the best. All right. Euro. If we can get it up here. See it. Okay. Open interest increases with higher volume off this low yesterday. Remember talking for the last couple of weeks about this market sort of being off my reservation, off my front burner. It's kind of back burnered it, and it seems as though it's been remaining in short time frame control. So we had a pretty good boost in open interest off that low. Not a big range or anything, but there's some hints of continual or new perhaps buying because we had an up move on negative delta. I know it's hard to see on these charts. Perhaps some new buyers came in along last week's low yesterday. Well, those new buyers are certainly getting paid today with the advent of some perhaps new good information or some positive things for the world. Oh, that would be so wonderful. Settlement in the euro 1.1023. Gap rules. Opening range, the low of the session. Two easy upside targets we've already reached. Three, actually. Last week's high, a naked point of control up here, just traded right to it. When traders are looking at a level, price tends to go there. Next level would be weekly kickoff high. This is a hard day to trade because we don't want to try and pick a top, but the market could be a little bit too long and short time frame. Look for opportunities to limit risk. This point of control may be one of those opportunities. The 10-year. Okay. I think it was leaving town when we were about here. I was thinking, we may be getting a little too short here. We may need a pullback or some consolidation. Well, we got a little bit of consolidation and we see the market continuing to move lower. Balance, continuation. Balance, continuation. Balance, continuation. Now I'm starting to really think that this market is getting a little bit too short. It doesn't mean that the market is going to stop continuing to go down. It just may take another break. We may get a little bit of a pullback. When we look at the balance areas of directional moves, when they start getting closer together and overlapping, that may be an indication that the auction is tiring to that direction, and you may need an area of consolidation, much the way we did here or here. We may just be setting up another balance area here, but if we start to see buyers come in, if we start to see some of our shorts some of them might be short in the hole, get nervous, we could see a decent pullback off of that. It's a very difficult time to trade, although can be very profitable. Remember, when we have directional moves like this, the opposing moves can be vicious and fast. You can make fast money. You can also, of course, lose it. ZN 30-minute. Here it is. Overnight shorts. Market opens. Overnight shorts get nervous. The shorts in the hole down here are starting to get more nervous. We could see a much deeper pullback to the upside here. We could. I don't want to step in front of it. I think we're a little too short. And our balance area is really the high of yesterday's regular trading hour session. So before I start to think about selling it, I need price to get a little bit more expensive. And if we can't find resistance up here, there's nothing that says this market can't come up here and check back to this naked point of control here from last week. I'm going to put this on here while we're all watching. We'll see what happens. All right. Now let's look at the nat gas. Big kind of a big dump after the hopeful news this morning. Seemed to be coming off of that a little bit. Got some pretty consistent moving to the upside. It's in rollover. Open interest is going to be a little bit blurry because of rollover, indicating yesterday that we lost 6,600 in open interest off that high. That could have certainly been a degree of profit taking after all these longs, after all this upward movement. The hopeful news this morning had a decent push to the downside. That seems to be kind of falling off. What does it look like on the 30-minute chart? Overnight shorts, gap open, gap now closed, tested to this point of control. Another point of control up here from yesterday. Settlement 554 approximately. So now it becomes, do we reaccept inside of range and or value from yesterday, or does this become an area of resistance? Lots of weak structure down below, well down below, in the form of naked points of control, gaps. Got a lot of gaps to fill down below. And that only matters, ladies and gentlemen, if we head in that direction. Important levels only matter when they matter. Right. All right. So it's good to be back with everybody. Good to be back in the saddle. I'll be seeing what kind of opportunities I can scare up today, and hopefully we've given you some good ideas and some good context for your opportunities today. What else is going on? Do you have an alternate source for open interest? CME Daily Bulletin is showing yesterday's bulletin. If you refresh the page, Fred, it'll show you the preliminary for yesterday's session. You don't want Friday's session. Just refresh the page. Let me know how that works for you. All right. Okay. Let's take our deep breath. Stay humble, grateful, and creative today. So wonderful to be back with everybody today. Trade well. Be looking forward to seeing everybody on the market recap. We'll see how these markets played out. And hopefully they played out in your favor. Get out there and profit today. Trade well. I'll see you in the proverbial pit in about 2 minutes. Have a great trading day. And yes, Tachyon, peace. Keep praying for peace. Have a great trading day. We'll see you at 3 o'clock for the recap. Trade well.